Hello and welcome to another MCO update on gold. Yeah, the gold chart has reacted to this resistance area and we want to take a look at the microstructure here today in this video. Before we do that, let's zoom out a little bit, take a look at the structure from this third wave high that formed on the 22nd of April at around $3,510. Some of you have asked for some clarification, because the question was, okay, is it possible that this larger fourth wave, so after the third wave is topped, is it possible that this was already the low in the wave 4, the swing low on the 15th of May? And I said, yeah, I mean, it's a 3-wave pullback that always keeps the door open for higher, but based on the nanostructure, it's just not for me the preferred scenario, I have to say. Okay, well, it's technically, of course, possible, which is why I'm tracking here in the alternative scenario another 1-2 setup. That is possible. For now, what I'm tracking here is A wave down, B wave up. It hasn't even broken above the April high. And then potentially the start of the C wave to the downside, because that is how a correction should unfold. A, B, C. Now, the A wave is a 3-wave move, so naturally, whenever that's the case, it's a so-called flat correction. The B wave would often, not always, reach the 88.7 retracement, sometimes even higher. So that's what it's done now. 3,460 is one of the original Elliott wave guidelines. In a flat correction, typically it's assumed the price gets to the 88.7 retracement. It's not always the case, however. Markets are a bit more complex than that, but yeah. Therefore, it's however no surprise that the B wave is quite aggressive. It's just something that's defined in the original Elliott wave guidelines. Now, the idea is this is a B wave, which might have topped now. Evidence is a little bit limited, but we'll zoom in a minute and take a look at it. So if this indeed is a B wave rally here, then it's a complex one. So the way to track this is you can track it as 3 waves, but it would have to be a complex correction. So clearly we have an ABC, which is a 3-wave move, in this case wave W. We have a pullback, in this case the X wave, and then another rally, also in 3 waves, A, B, C. And that gives us a 3-3-3 pattern. That's a WXY structure. And B waves are quite frequently WXY structures. It's not the most common pattern, but it is still quite common. And it's reached, let's say, a cluster of resistance here. And we have 3,460 here, roughly, as key resistance. So the price got rejected there. It's now possible that the C wave to the downside has started. If that is the case, and again, the evidence is really, really limited, then typically you would expect the C wave to reach the 100% extension. It's at least, let's say, a landmark on the chart, $3,092. Roughly $3,100. Do we have to get there now? No, I mean, again, evidence is still quite thin that we actually have a top. If we, you see it, we're zoomed out. The move down isn't really more substantial than any of these previous pullbacks. But I think, at least based on this analysis, this move down is due. Let's zoom in a little bit. Let's take a look at the 30-minute chart. And what you can see on the chart is, I'd say, something that looks like a 5-wave decline. So it could be wave 1 of C. Is it really a 5-wave move? I think so. It does look like 1, 2, 3, 4, 5. And this here could be our resistance area. Yeah, it's unchanged. So I communicated that earlier today in our members area, where I'm tracking gold also daily. So don't be surprised where that comes from. It's between $3,430 to $3,460. That's standard resistance area. We might test it because we have a 5-wave move down. Let me move them into place here. And of course, I mean, it's 5 down, but it is really, really small. Yeah, so it's a better indication or confirmation that really a top is in would be a 5-wave move that also breaks below this swing low at around $3,310, the swing low from the 9th of June. But yeah, I mean, if this is a wave 1, then this could be A, B, C in wave 2. And then from there, third wave down, and we could continue to the downside like that. Then a wave 2 corrective rally. Now, as long as we stay below 3,460, the market should move down lower. But again, this is not yet high confidence. It would be fairly high confidence if we get these 5 waves down and the 3 waves up of the next larger degree. So it gives you some key levels to watch. If we push higher, if the market now breaks above resistance, then the next levels to watch are in the $3,500 to $3,512 area. That's the update on gold. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you are interested in additional updates on gold, silver, stocks, the S&P 500, the Nasdaq, check out our stocks membership. I have linked it in the description and the comment section. Thanks so much. Bye-bye.